Zacks. I'm your host, Ben Rains, and today we're looking at 3 large cap tech stocks to consider buying during the Q3 earnings season, which kicks off tomorrow unofficially with some of the big banks. And this is amid some trade war optimism. But before we get into everything, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever it is you listen to your podcasts. So as I mentioned, there was some positive U.S. China trade war updates that came out late Friday afternoon. This helped U.S. stocks surge in the afternoon on Friday and for most of the day Friday. So the Dow closed up 1.2%, the S&P 500 was up 1.1%, and the NASDAQ was up 1.3% on Friday. And as I mentioned, so the U.S. and China said they agreed in principle on what President Trump and some people in the U.S. are calling the first phase of a trade deal that could see things slowly calm down amid this ongoing trade war that has people concerned about a global economic slowdown. So President Trump told reporters after his meeting with a Chinese vice premier last Friday at the White House that we've, quote, come to a very substantial phase one deal. According to Trump, he went on to say that China agreed to purchase $40 billion to $50 billion worth of U.S. agricultural products and commit to opening itself to more international financial services. Meanwhile, the U.S. won't up its tariffs on October 15th. So this is clearly some progress. We'll see what happens. This has been going on for some time. So until there is a 100% deal stamped and everyone says this is going to happen, these things are going in place, we do not know. Certainly, since there are still broader geopolitical concerns going on, this includes the U.S. blacklisting of Chinese companies such as Huawei. Now there's a new fight between the NBA and China. We have some increased impeachment talk here in the U.S. So there's broader concerns, but overall, Trump and the U.S. seem relatively positive, which is always a good sign for the markets. Stocks did climb by midday Monday after opening a little lower. This was after China seemed to take a more measured approach to what they saw from the trade talks on Thursday and Friday. But as I mentioned, by noon Eastern, all 3 of the major U.S. indexes had bounced slightly into the green, and this is on a slow Columbus Day holiday where bond markets in most banks are closed. And then, obviously, as I mentioned, there's a lot going on, and there's no guarantee that anything's going to happen anytime soon, but we do have what we're calling, Trump in the White House are calling phase one of a deal. And I want to just close before we dive into today's real topic with some tweets from President Trump yesterday that kind of encapsulate everything that happened from Friday as part of this new look phase one of a trade deal. So this is from Trump's Twitter account yesterday. So my deal with China is that they will, in all caps, immediately start buying very large quantities of our agricultural product, not wait until the deal is signed over the next 3 or 4 weeks. They have already started. Likewise, financial services and other aspects start preparing. This is then another tweet. I agree not to increase tariffs from 25% to 30% on October 15th. They will remain at 25%. The relationship with China is very good. We will finish out the large phase one part of the deal, then head directly into phase two. The phase one deal can be finalized and get signed soon. So that's where Trump sees the state of the U.S.-Chinese trade war. And as I said, these updates are daily, hourly, and we won't really know what's happening. But it seems like the markets are relatively satisfied that they've at least started talking again, and there's signs that we're headed in the right direction, where at some points it seemed like maybe nothing was going to come of this for some time. So now, amid all this positivity, I want to take a look at 3 companies that look like solid buys at the moment as we ramp up Q3 earnings season and really get into the fourth quarter of 2019. So we're going to start off with a look at Microsoft, which has cooled off over the past 3 months after a really strong start to 2019. So yeah, they've moved pretty much sideways since July. But overall, despite that, Microsoft stock has crushed all of the so-called FANG stocks over the last 12 months as the historic tech firm continues to prove it's one of the most solid investments out there. In Microsoft's pitch to investors is maybe as strong as ever. The company, which rose to prominence on the back of its widely successful Windows and Office suites, has expanded recently heavily through cloud computing. Cloud is that big tech buzzword, and it's certainly become something that's not going away anytime soon. And Microsoft now stands out in that crowded space more than ever. The Redmond, Washington-based company is the second largest cloud computing firm at the moment, behind only Amazon, who got a big head start in the business, and that really helped Amazon kind of expand through into other areas through the high margin success of AWS. So, as we mentioned, Microsoft's, which trades under the ticker MSFT, its legacy businesses have also evolved, and they've also grown through acquisitions as well. This includes the 2016 purchase of business-focused social media platform LinkedIn, which that unit saw its revenue climb 25% last quarter. More recently, and this is last June, Microsoft bought open source software power GitHub, which could continue to play a more substantial role in the company going forward. And if you look, Microsoft does deals all the time, most often for much smaller companies, but they're always buying up tech companies seemingly once or twice a month at least. But those are two of their bigger purchases within the last couple of years. And as I mentioned, yeah, the firm remains highly diversified from software to hardware, remains crucial to businesses, governments, individuals all around the world as maybe ever before. In jumping back to what we talked about at the top, Microsoft stock has outpaced Facebook, Apple, Amazon, Netflix, and Google all over the last 12 months. Microsoft stock is up 30% over this period, with second place Facebook up just 20% out of those big, much talked about, much hyped tech companies. And Microsoft has also seen its stock price climb over 144% in the past 3 years. To put that in perspective, the industry is up only 40% over that period. Apple's up just 100%, and Amazon's up 110%. So it's not just this last year that has seen Microsoft stand out from these bigger, maybe more talked about FANG stocks like Amazon and Apple. It's been over an extended period of time that Microsoft looks so strong. And then overall, Microsoft's valuation picture remains relatively solid despite its huge jump in stock price. And then on September 18th, the company announced that it raised its quarterly cash dividend by 11% and approved a new $40 billion stock repurchase plan. So the new dividend is going to be payable on December 12th to shareholders of record on November 21st. And at the moment, Microsoft's current annualized dividend is $1.84 per share. So this is obviously going to change with that new 51 cents per share payout. And its yield is at about 1.3% at the moment, which is not too far off from the payout of the 10-year U.S. Treasury, which is at 1.7% as of Friday. And then looking ahead, we're going to now just go into some of our estimates for Microsoft, and then we'll go on to our next company. So Microsoft is set to release its first quarter of fiscal 2020. That's the quarter they're going to report on October 23rd. Our estimates call for its revenue to jump nearly 11%, and this would come on top of the year ago period, so Q1 2019's 19% sales growth. So some really impressive year-over-year numbers, and then this would nearly match last quarter's 12% growth. So that's Q4 of 2019. And then overall, fiscal 2020 revenues are projected to jump over 11% for the year, with fiscal 2021, so that next year, expected to jump 10.5% above that. So some really solid and stable top-line growth for Microsoft. And we should note that they would mark a little bit of a slowdown, this 11 and 10.5% compared to 2019's 14%, which actually match 2018's 14% as well, but this would easily crush some of those periods before that from 2017 and 2016 and 2015. So the company is growing at a really strong clip for a company of its age and size. And then at the bottom end of the income statement, its adjusted quarterly earnings are projected to climb 9.7% this quarter, and then about 10% for the year and 13% in the following year. So as I mentioned, really stable, impressive top and bottom line growth for Microsoft at the moment. And the reason it's a Zacks ranked number 2 buy right now also is based heavily on its recent positive earnings estimate revision activity. And the company also boasts B grades for both growth and momentum in our style score system. So Microsoft, for all the reasons we just mentioned, certainly looks like a company worth considering at the moment. And now we're going to move on to another company that doesn't really need much of an introduction at all, and that is Facebook. And it is also a number 2 buy at the moment. So Facebook shares are down about 9% since it reported solid second quarter results in July. But despite that downturn, the stock, as I mentioned, looks very, very strong. Facebook holds its $530 billion market cap, thanks in large part to its ability to continue to attract users across its now array of platforms, which includes its namesake Facebook, Instagram, WhatsApp, Messenger, and Mark Zuckerberg's company also remains the big reason why it's so good for investors is that it remains invaluable to advertisers and marketers around the world, especially here in the United States, as consumers really become harder and harder to reach in an era dominated by Netflix and other non-ad supported platforms. And amid all of the negative headlines and controversy, Facebook's daily and monthly active user totals climbed 8% in the second quarter to match the first quarter's 8% expansion as well. And its daily active users in the United States and Canada, which are really important, they account for about 50% of total revenues, showed signs of strength last quarter as well. And then this is kind of a jarring number when you wrap your head around it. Executives at Facebook now project that more than 2.7 billion people use at least one of its family of services every month. So about 30% or more of the entire global population uses one of Facebook's various platforms every month, which is just insane. And then overall, Facebook in 2019 is expected to grab just over 20%, so 22% of total U.S. digital ad revenue, which would be up slightly from 2018. And this is based on eMarketer data, and they would be the second largest U.S. digital advertiser behind only Google, which is all the way up there at 37%. So Facebook's also trying to expand going forward to be beyond just an ad business. They are trying to and have continued to try to expand their digital footprint in terms of video. So they're getting into what you could call this streaming TV market, even though people don't necessarily see Facebook Watch as being on that level yet. But they're going to try to compete alongside Apple and Disney and all of these other companies who are going to try to challenge Netflix and Amazon Prime in this streaming TV world. We have also seen the growth of Facebook Marketplace recently, which now competes alongside eBay and other online marketplaces. And obviously, Facebook is not totally out of the woods when it comes to governmental scrutiny, even though it did pay a historic $5 billion Federal Trade Commission fine earlier this year. The company faces broader antitrust reviews as part of a larger U.S. government probe into big tech companies such as Amazon and Google, and obviously Facebook and others as well. More officially, though, Zuckerberg is set to appear, this is CEO Mark Zuckerberg, set to appear in front of the House Financial Services Committee on October 23rd to discuss Facebook's plans to jump into cryptocurrency, which it seems like most U.S. government regulators are pretty heavily against. So this was Facebook's big summer announcement. Facebook and Zuckerberg in June announced that they're going to try to roll out a blockchain-based cryptocurrency. And this was part of a larger group of companies that were going to help Facebook do this, which included credit card and payment giants like MasterCard and others. However, some of the companies might be a little less hesitant to be involved with its government kind of erring on the side of caution in terms of Facebook jumping into this market. We also recently had PayPal officially back out of the joint venture, so maybe more companies will slowly back out, but we're not sure at that point just yet. And even if Facebook isn't able to roll out this cryptocurrency, it's really not going to hurt their business. This was more of a longer term play going forward, but who knows? We'll have to come back to what they're going to do with this cryptocurrency down the road once we hear more about how these hearings go next week. So then meanwhile, despite its recent downturn, shares of Facebook have jumped about 40% in 2019. And despite this overall climb, it sits about 12% below its 52-week highs, which could give the stock some room to run heading into earnings. And meanwhile, Facebook's valuation picture appears pretty solid. It's trading at about 20 times forward 12-month Zacks consensus earning estimates, which marks a discount compared to its industry's 27% average, and its own 3-year median, which was at about 23.5, and its high over that period of about 35.5. So it's becoming much more of a stabilized valuation play. It's obviously not what most people consider a value stock at the moment, but it's trading at a discount compared to its industry, and more importantly, it's trading at a discount compared to where it has historically just over the last 3 years. And then looking ahead for its Q3 2019, so the quarter they're expected to report soon, its revenues are projected to jump over 26%. And this would match Q1 sales growth and come in just below the fourth quarter. And then for their full year 2019, revenue is projected to jump 26% again. And then for 2020, we're expecting 22% growth above that. So 26% growth this year, and then another 22% growth that next year. Obviously, this is going to mark a bit of a slowdown to where Facebook has been growing for for its whole history as a public company. But these estimates have been out there for a while, and obviously Wall Street and traders knew the company would not be able to grow at 40% for the entire life of its business. So this is something that people have known was coming, and obviously people have been willing to pay for that stock with these slower overall growth numbers, which that's a factor of the law of large numbers. It's going to become harder and harder to post these massive year-over-year percentage growth figures when you're getting into, we're expecting Facebook to pull in about $86 billion in 2020. So when you get up to those higher numbers, it's just a little bit harder. So then in terms of the bottom end of the income statement, Facebook's adjusted Q3 earnings are projected to climb about 8.5% this quarter. For the full year, Facebook's adjusted earnings are expected to slip a little bit overall, so about 16% from 2018, but this was what people were expecting as they spend on improved security for their platforms, try to expand into more areas, and just more spending than the company has been used to in its recent history. And then overall fiscal 2020 earnings are then expected to jump 50% above our current year estimate. So some back to big top line or bottom line growth that following year. And then obviously overall, we mentioned that Facebook is also number 2 buy, just like Microsoft. For all the reasons we've discussed, I think it's certainly a stock worth considering at the moment. Obviously, though, the ongoing possibility of further government scrutiny and intervention remains something that Facebook investors have to take into consideration, as do investors of other of these big tech companies. And we should note that Facebook is set to report its Q3 financial results on October 30th. And now I want to move on to the last company we're going to discuss today, and that is Alibaba. And it is also the only one of the three stocks today that is a Zacks rank number one strong buy at the moment, that also has B grades for both growth and momentum in our style score system. So for those of you who have been following Alibaba maybe at all, the Chinese e-commerce powerhouse has seen its stock been more volatile maybe than most people. Well, most people wouldn't, unless you're a trader, you don't really love that volatility, but it's been pretty volatile over the last 2 years, but it is up relatively big over this stretch. And Alibaba does look strong as it prepares to officially start its post-Jack Ma era after the outspoken and really fun-loving founder of Alibaba officially stepped down from his role. So Alibaba, for those of you who don't know, operates the two largest e-commerce platforms in China, which accounted for about 87% of its sales in its most recent quarter. And like one of its U.S. counterparts, Alibaba has also expanded into cloud computing in recent years. This sector jumped 66% last quarter to make up about 7% of total revenues. And then along with cloud computing and e-commerce, Alibaba also operates a digital media and entertainment business, which grabbed about 5% of total quarterly revenue last period. And then we should also note that since I'm not exactly sure how big this deal will be going forward, because the companies haven't really gotten into any details of that. But investors should note that Alibaba and Salesforce announced in late July that they would be partnering up in China. So that's certainly something to watch out for going forward. And then Alibaba, as I mentioned, is a massive e-commerce business. They hold about 2/3 of the e-commerce market share in the world's second largest economy at the moment. And it's beefed up its logistics business to try to expand further outside of big cities such as Beijing and Shanghai, because those, as many might assume, are becoming more and more saturated. So the firm said that 70% of its new customers this past quarter live in what they call less developed areas. So the company's ability to expand to reach more of the country's roughly 1.4 billion people will be really vital going forward as they try to expand, as I mentioned, into those smaller cities. And moving on, we're going to take a quick look at some of their estimates, and as we have with these two other companies. So right now, Alibaba's quarterly revenues are expected to climb about 36% with their full year fiscal 2020, which is their current fiscal year. Their full year revenues are expected to climb 32%. And then for that following year, we're calling for another 31% growth on top of that. So it's always good to see not just a one big year or 1 year jump of a big growth, to see this 32% is going to be expected to be followed up with another 31% growth that next year. And then at the bottom end of the income statement, and I haven't mentioned it, so BABA trades under the ticker BA. Their adjusted quarterly earnings are expected to climb about 11%, with their full year earnings expected to climb 26%, and then another 24% in that next year. So some stable top line growth we're calling for, and some stable bottom line growth as well. And we should also note that Alibaba has easily topped our earnings estimates in the trailing 4 periods by about 20%. And the company is obviously a Zacks ranked number one strong buy, as I mentioned. So they've seen a lot of positive earnings estimate revision activity recently to help them reach that number one buy mark. And BABA stock is officially up about 26% in 2019, 20% over the last 12 months. Yet despite this growth, it's still down about 12% off its 52-week high. So there's plenty of room to run for Alibaba heading into its quarterly earnings release. So we've talked about 3 big tech companies with well-known names throughout most of the world: Microsoft, Facebook, and Alibaba. And we talked about the trade war progress at the top. So these are certainly 3 stocks worth considering at the moment. But that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.